Hi, friends. So, welcome back. I wanted to talk about my experiences as a trader in FX and in stocks. So, what it's been like as a trader here in Africa, my experience, which one I think is better than which, and why I think you can't do both necessarily, especially if you're here in Africa. And I also want to talk about the advantages and disadvantages of each so that you pick which one is best suited for your character, your location, where you are, and overall your interests. Because I think that those who trade FX, their interests are very different to those who are involved in stocks. So I want to talk little bit about that. So the first of all, you can make money in both. There is no which one of like you're more likely to make more money in this one than in this. So it's more of a level playing field with both. But I think that FX brokers get a bit of a bad rap compared to stock brokers because they're not actively like charging this like huge spreads and manipulating the spreads, especially during economic events and things like that. Stocks don't necessarily have are not they're not as what can I say? They're not as sensitive. Yes, they're not as sensitive to economic events as FX is, which is what drives the FX market and manipulation by the brokers. So you can make money with both. It's not one or the other. You're gonna understand why I say it's one or the other. So the FX market is open 24 hours, 5 days a week, whereas even though the stocks market is open 5 days a week, um, it's not 24 hours. So it has a closing date around 6 p.m. and things like that. So it's not all night and you don't and that's a good thing actually. I think it's a really good thing because I started off in stocks, so it's actually a really good thing in the fact that you get to actually sleep and rest and you're not as nervous or anxious. If you're like me, I'm really anxious of having positions overnight and like where's my stop loss, is it going to get hit and things like that. So it's good in the sense of you get to take a break. It's good for your emotions, it's good for your mental health and sleep patterns. Really, really good for your sleep patterns as compared to FX traders. Trust me, the FX traders who are up at 2 a.m., 1 a.m., and I'm one of them. So if you enjoy it that much, that might be you. There's more liquidity and volatility in FX than in the stock market, practically because there's huge institutions and huge countries involved in the FX market, and there's more participants. It's existed for longer. Apparently, it started in Babylon, or the Babylonians started FX trading. Things I've done a bit of research on the origin. Some say it's the Babylonians, some would say it's Netherlands, but it's been around for longer than the equities market, so it's more established. But a downfall is that there's a higher failure rate in FX than in equities. I don't know what it is. I think it all comes down to marketing and influencer marketing, where you have people selling a lifestyle in the FX market as compared to the equities. Yes, there's some like penny stock guys on YouTube and things like that, and other stock guys on YouTube, but they're not as prominent as FX. I think it's because FX has a sort of an esoteric feeling to it, where it's like people don't quite understand what it's about and how bid and sell, things like that. Whereas like with stocks, it's just obvious: you hold and buy, you sell. So it doesn't have that lure that FX has. There are more stock trader millionaires than there are FX ones, and I see that there are more FX traders selling courses than they are stock market because it's much easier to just say buy and hold something you find value in, and that's just it. Whereas there's more money in courses and robots and scams in FX than in stocks because it's more complicated, so it attracts more scammers and things like that. But even despite that, there's still more millionaires in stock trading than in FX. The ones who make it in FX, like the more millions, a lot of the times it's through courses and selling. There's nothing wrong with that. I'm just saying what it is. It is what it is. There's more successful algo traders in equities than there is in FX. So it's easier to have an algo that works in equities than FX. I think it's based on stability and past data and the stability of companies, whereas in the FX market, it's really, really difficult to predict a downfall. And uptrends and downtrends are more consistent in in the equities market, and there's less range movements in the equities and FX. So I think algos find it easier to implement strategy in equities than in FX. And so you'll find like a lot of the hedge funds and the billionaires are more involved in equities than they are in FX. Logically, that's what happens. Options trading is very difficult. I tried it. I'm still reading. There's this book I'm reading right now. It's based on equities trading here in SA, and so I'm reading that book, that strategy. I'm trying to understand a lot about it. I tried stocks and I just gave up on it. I wasn't as interested in stocks as I am in FX. FX really, really did capture my attention. I started off in stocks. I didn't do really well in stocks. And I think the reason, number one, was because I was listening to a lot of news. And so I would wake up in the morning, I'd have my coffee, and I'd listen to the news. And I didn't know that the CNBC and these other channels are paid by stockbrokers and things like that, and the companies to spread a narrative. And I didn't have like the insider information, which a lot of like the hedge funds and them know. So you're easily caught off guard as compared to like in the FX market where everyone knows a certain economic event is going to happen. So you just step aside and you wait. You hold your stop loss or you lock in your profits and you step aside. Whereas with the stock markets, you'd have to have some like deep level experience or knowledge which the public doesn't have in order to know when big events are happening, tail events, so you can sort of step aside. So I think that was another big issue, which was the marketing of news and fundamentals is much easier to predict in FX than it is in equities. And there's more money you need for stock trading than in FX. FX, there's some brokers who even offer accounts for as low as $1 or $5. Whereas with stocks, a lot of them they're like 1,000 or 500 for you to start off. I think 500 is a little less, but like usually like 1,000 for you to have good risk management. At the same time, even though it needs more money in stocks and equities, it's easier to control your risk than in FX. In FX, swaps and spreads complicate things as compared to like pure flat commissions. You pay your commissions, you know you're paying this much in commissions, this much in buying the stocks, that's it. FX, there's so many things like swaps and then the spreads which increase during economic events and things like that. It's much more difficult to control. There's more liquidity and volatility in FX. We explained that. And that penny stocks were like the big thing when I started out, where everyone was like, penny stocks are it, penny stocks are it. And the reality is, in Africa, we didn't have as much access to penny stocks that they have in the States. For like on their YouTube channels, they'd be like, go for these penny stocks, go for these. And I didn't have necessarily the access that they have. So I struggled a lot with that. So I just said like penny stock days are dead. Everyone knows like penny stocks now are just dead. No one even goes for that anymore. And I found that like with equities, it's more people who have interest in like accounting, which I just do because I have to. You have to do bookkeeping and accounting for lawyers, so I don't have much of an option. You have to know accounting. You have to know accounting statements. You have to know obviously certificates from auditors and things like that. So you do have to know accounting, which I'm not a fan of. I just do because I have to do it as an attorney. But so for equities, you need to know accounting, insider information about the company. You really have to know about the founders. Do you have trust in them? Because like people like Elon Musk wake up and just cause havoc on Twitter and things like that. Where so that's the sort of character who is attracted to equities. Someone who likes accounting, financial statements, innovation, IT. Who has belief in entrepreneurship and the founders and the managers. Whereas with someone who is more interested in ethics, they're more interested in politics, economic philosophy, economic events, macro and micro, and things like that. Who are necessarily inclined to that as compared to like the accounting and financial statements and stuff like that. What else haven't I talked about? It's easier to manipulate the stocks than it is to manipulate the FX, because manipulation that happens at FX is just like the spreads. For us, that's the most manipulation we'll get is like the spreads during an economic event. Whereas with stocks, like things can happen, like they could all just like the big institutions could all just gather and decide they're gonna short Tesla, right? Someone like me would never know that that's the plan, and all of a sudden a big tail event would hit you, and you're practically unaware of that. Whereas with the manipulation in FX, you can control with your stop loss. Obviously, you can do the same in equities, but the most manipulation you'll see on a daily basis is just It's just the price, and you never really know what a company is doing inside. Like Enron. No one knew what Enron was doing. They were manipulating the books and things like that. So you can never have control over the company and its founders and its managers like Enron. So all of a sudden, if you had all of your savings or whatever it was in a company, invested in the company, you have no control over what they do. And another one is Steinhoff was a really, really big one. We did that case study, and I think third year law school, we did that case study. So you can never really control what a company does inside, which makes it a bit scary for me as compared to FX, where you know what you're getting into, you know your broker, you know your manipulator, and the reason why I said you can't be good at both is unless you're interested in like both accounting, financial statements, entrepreneurship, and you're also interested in like politics and economic events and FX, then go ahead, you're interested in both. I found that I preferred FX. And another issue I found like when I did equities in Africa was that like you had two options. Either you had to look at the US market and you had to know a lot about the US market, which was a lot of learning from me. Like, what does this company do? Which company is this? A lot of them are foreign names for me. I didn't know what Macy's was or this was, and you'd have to, like, okay, this is Macy's, it's in the retail industry, these are the other retail players, these ones are the bigger ones, these ones are doing this. There was always the quarterly reports and things like that. You had to scour through the reports and try to predict what was going on. So you have to learn the US market and all about these companies, what they do. Um, and so you have that challenge, and then also the insider information that comes with that. I don't know what's going on inside Macy's. I don't know something what an American citizen knows about Macy's or what's going on. They can see things in the companies when they interact with the companies. So on a daily basis, they know what's going on at like um, Macy's or these companies that they attend, Target, whatever it is. They go to these companies on a daily basis, so they can tell the decline in banks or whatever it is because they're there and they have first-hand experience. Where I'm reading second-hand experience, oh, this is what's happening in Macy's. There's a downfall, and I'll only know about the downfall of like the banks in America reading in hindsight once you've already lost. And then there's the option of the Johannesburg Stock Exchange, where you're going through the Johannesburg and the South African companies, which are more volatile, and so there is a greater opportunity for making more money. But the only issue is the volatility. The thing with the third world countries and stock markets is that you do have potential for higher returns, like Sasol. It was one of the best performing stocks in 2020, and the other one was called I forgot what it was called. It was some version of. I know they own DSTV or multi choice, so that's the company that does that. I forgot what the parent company is called. Those are the best performing, but really great volatility. Like, I mean, look at what Steinhoff does. It can go from like, I don't know, 1,000 to 1 rand in one day. So it's much more riskier, especially it's much more risky, especially if you're starting out. It could be a terrible and crippling experience for someone to be doing something which is that volatile, especially in South Africa, like Steinhoffs and things like that. I know they happen in America, but it's more common in third world countries and in these newly established companies.